really didn't know what this group was all about, but listening to you guys gives me some other stuff to talk about, because I've dealt a lot with properties that that people want to invest in, foreclosures, tax sales, that kind of thing. So I've got a lot of input on that, but I think we'll start with what title insurance is and how we do it. As real estate investors, you guys have probably dealt with title and escrow before quite a bit. And as you know, they usually go hand in hand. Title companies usually have an escrow component to them. I don't deal with the escrow component. I let them do their work and I stay out of it. I've got enough on my plate with titles. So what we do on my end is we research real estate titles with the ultimate goal of issuing a title insurance policy. Okay, so I'm going to start a little bit with what a title insurance policy actually is and what it does for you. It's not like typical insurance where you pay a monthly premium or an annual premium, and that insurance company is going to cover you against losses for future events. You crash your car, your house burns down, you die and have life insurance that pays out. We don't do that kind of thing. We insure against things that have happened in the past, and our insurance is a one-time premium. If you buy a house, you get a title insurance policy, the premium's paid once, and it lasts as long as you own that property. What we're doing is we're insuring you against anything that happened with the real estate title up to the point where you purchased it. So what we're really issuing is a contract of indemnity. We're going to cover you against any loss that arises from any of these matters that are covered by the policy that might crop up. For instance, I paid claims for a missed easement when the homeowner wanted to put a pool in his backyard and found out the easement took up a lot of the backyard and he couldn't get a permit to build a pool. So we paid him $32,000 because he couldn't put a pool in his backyard. So those are the kind of things we look for. And some of the other things the title policy insures you against are cases of fraud where the party signing the deed giving you the property doesn't have a legal right to sign it. We insure against monetary encumbrances, easements, any restrictions that restrict the use of the property. You know, if you go buy a piece of property and decide you want to put a manufactured home on it, you may find out that the property is restricted and you cannot put a manufactured home on it. And that would kind of mess with your plans. So to accomplish all this, we have what we call a title plant. And a title plant is nothing more than a collection of any information that may affect the title to your real estate. Now, there's a lot of things that can do that. A lot of local ordinances that can change on a whim, things like that. And they're not part of the public record per se. So we don't typically provide coverage for things like that. There are other matters that aren't part of the public record, things like encroachments that nobody knows about, but matters that a correct survey would show. We're not typically going to provide you coverage for that. We can, but it's at a much greater cost. So primarily what we're looking for when we search real estate title is we're looking for things that are part of the public record. That normally means the courthouse or the county deeds and records. And we're looking for documents that have recorded, because if a document isn't recorded, there's no public notice of it and it really has no effect on a piece of property. So at any title company you go to, we have our records collected. Now at Evergreen Land Title and at other title companies in Lane County, our title plants go all the way back to statehood for the state of Oregon. And I can search a piece of property back to the original deed from the government for that property. And collecting those records takes obviously a lot of time, and organizing them in a fashion that I can dig through millions of records and find just the documents I'm looking for is the key to a successful title plan. So I'm going to describe our title plant a little bit, and I'm going to work backwards in time. Right now, we have a computerized title plant that carries us back to 1980. So from the present day all the way back to 1980, I can enter some descriptive information on a piece of property. I can enter a person's name. I can enter a document number from a recorded document. And I can run a search with my computer, and within seconds, it will show me every document from 1984 that affects that piece of property. It'll show me every court case that affects that person, whether it's a bankruptcy or you got sued for not paying a credit card, or there's a probate or a guardianship on a person or a tax lien. I can find all those matters. If I look at, say, a trust deed on my system, it'll tell me if it's been assigned, if there's been a new trustee appointed, if it's been modified. Anything that's been recorded is gonna, or as part of the courthouse records, is gonna come up on that. And I can expand those searches to beyond what my title policy covers sometimes, and that's important because sometimes we're asked to cover a little more than a standard policy would cover. So it's a pretty simple matter for me on my computer. I actually have it set up where I can work from home, and I use this setup right here. And I can go in and search a piece of property very quickly, all the way back to 1980. Prior to 1980, it gets a little more difficult because records then were not computerized, and people would post them to big ledger books by hand. Our current computerized system was actually designed and brought into being by the founder of our company, Scott Stovall. So it's been around for quite a while, and it's one of the better ones I've worked with. But prior to that, like I said, we use big books that normally you go to the book that has your property is going to be in a particular book. And so before I go any further with that, we'll talk about how I find my property in those books. And that goes directly to the legal description of the property. I need to know where the property is precisely, and that's what a legal description does for me. It's also one of the things that I ensure on my title policy. I'm telling you that you own the piece of property shown on your policy and described on your policy. It doesn't go by address. It doesn't go by tax parcel number, nothing like that. Those things can change and often do. The legal description remains the same unless you change it on the record, okay? So one of the first things I do when I search a piece of property is I find that legal description. And I usually get that through information I get from the county. The county, here in Lane County, we've got a really great system called RLID. So if you're working a lot with real estate in Lane County, I highly recommend that you get a subscription to it. It's the Regional Land Information Database. You can enter an address, it'll pull that property up. You can get maps, taxes, several of the deeds, and a lot of other information like zoning and stuff like that. Grace is asking, how do you find the address when only the legal description is available? Well, there are a lot of properties that don't have an address. So sometimes people will call up and don't really know what the property is, and they'll start to describe where it is in relation to a piece of property with an address or in relation to an intersection. They may have a tax parcel number or a tax account number, and I can pull it up that way. Sometimes I have to pull a map out and ask a lot of questions. I can also search by owner. If you know who the owner of the property is, I can find the property that way on the county system. So that's my first order of business, is locating the property. So I find the property, I pull my maps, and I look at the legal description. Now, a legal description is, it's going to be either what we call a lot and block, which is property that's in a recorded subdivision. That would also include small subdivisions like partition plats that have 2 or 3 or 4 lots. If I have that lot and that block number and the recording information from the subdivision, I can go to my title plant and find the documents relating to that property. If it's not in a subdivision, we use a system of surveying here in Nevada that's it's based on a point up near Mount Hood called the Mount Diablo Meridian. And what that is it's we have a baseline that goes, I can never remember east, west, north, south, but we have a point where a line crosses north, south, and a line crosses east and west. And from that point, spreading out, property is divided into townships. A township is a 6 by 6 mile square. So you can have lines going south are township lines, and north of that point are township lines. Going east and west from that point, we again go in 6 mile increments, and we have range lines. So at this point, you can break an entire state, in this case, up into 6 by 6 mile squares. 6 by 6 miles, that's a lot of property. So we break it down even further into what we call sections, and a section is a 1 by 1 mile square. Now, even a 1 by 1 mile square, you can find thousands and thousands of properties in that 1 by 1 mile square. So we need to break it down further than that. So we break each section into quarters. You'll have a northwest, northeast, southwest, and southeast. And then we can break a quarter into smaller quarters and break it down that far. And you can get it to where you're dealing with a piece of property that's a few acres in size. And if you know your property's in there somewhere, we then have a way of labeling a piece of property within that section, township, and range boundary, so we can go into our book and find it. So I can take that legal description from the property, and I go into these old books that we have. Now, nowadays we have them digitized, so they're imaged on a computer and I can access them from my home. I've worked in a lot of areas where I doubt they'll ever digitize them because it's just not financially feasible. Some of the counties I worked in Nevada had fewer than 5,000 people in them. And I would have to travel sometimes 4 or 5 hours to get to a courthouse, and go into the courthouse and pull out these giant leather-bound books and start looking for my property records in there. But these books are basically just a line. It'll give you a date. It will give you the type of document, what we call a grantor and a grantee. On a deed, that would be the seller and the buyer. On a trust deed, it would be the borrower and the lender. And it will give you what precise property that document affects. So I then start going through these books. And again, I'm working backwards in time because I can find that property from a current deed, but I need to track backwards to see what happened to it. I can't start at the beginning because I don't know what the configuration of the property was then, but I do know what it is now, so I can locate my property and start working backwards. I'll go through that book and I'll start marking documents that are going to be important to me. What I mean by that is if I find a deed of trust that indicates there was a loan on the property, if that deed of trust has been reconveyed and paid off, I don't need to see it. It's not important to me. So I'm looking primarily for deeds, restrictions, easements, or any other document that, that may still have an impact on the property today. And I go through and I make a list of all those documents. And at one time, I used to have to then go to a microfilm machine and put reels of microfilm on it and search for my documents and print copies out. Nowadays, I can pull those copies up on my computer. And I can do that with documents going all the way back to the late 1850s. So that's how my title plant basically works for finding the documents that affect my property. I did mention we have part of our plants computerized and part of it is on these old books. Well, the old books only go back to anywhere from 1910 to 1930, depending on the area of the county you're in. So I have another set of old books that are even harder to read that go back to statehood. So those are the books that go from the 1850s up to about the 1930s. So I actually have 3 separate title plants that I have to go through to search a piece of property out. Now, I mentioned I work backwards. Another reason I work backwards is if I'm working backwards and I find where my company has insured a piece of property in the past or done any title work on it, I can go to that old file and everything prior to that's already been done. Those documents prior, nothing that happened prior to that insurance can change. So I just have to search back to where we've done work in the past. If we haven't, I have to go all the way back to the patent on the property. Yes, Scott, you have a question?
Yeah, sorry. I just, maybe I'm the only one on here, and that's okay. I will admit it. I heard you say a few moments ago, a property that doesn't have an address. So like, I'm thinking like, we're in the year 2020 and like, there are still properties out there with no address. Can you elaborate just a little bit on that? Like,
Yeah.
that's hard for me to grasp.
Let's say you're a timber company and you own a 40-acre piece of land out in the woods. That's privately owned property. It's not likely to have an address. It may not even be on a road, or it may not have a road going to it. Or it could be you have a piece of property. Let's say you have a piece of property that has an address on it and that house burned down. That doesn't mean the address is gone. You still, but let's say it's a 5-acre piece and that house is gone. So you have an address for all of that, but you're a developer and you don't want to just put one house on 5 acres. So you split it into 10.5-acre lots. Now you've got lots that don't have an address until the county assigns them. So we run into that a lot with brand new subdivision maps where someone will want us to do lot 4 on Main Street or whatever they might call it. Well, that's a pretty broad description, so I'm going to have to ask some questions. Okay, what subdivision is this in? If I can find that, I can track the property down. So, anyways, I described how we go back through all of the records, millions of documents, literally, and we can go all the way back to the patent on the property, and I can go look for like I said, the easements, restrictions, and things like that, because all of those, no matter how old they are, can have an impact on the property. There are places where you are restricted. I lived in a neighborhood before I moved out here to Marcola, and I had a neighbor complain about my chickens in the backyard, and he said it was a violation of the restrictions for the subdivision. And I showed him that no, it's a violation if I raise chickens commercially on the property, but I can have chickens for pets. So yeah, thank you, Grace. CC&Rs, covenants, conditions, and restrictions, and they come in a wide variety of forms, but they're important because they can restrict your use of the property. A lot of the old ones will tell you you have to have a wood frame structure with at least 2 coats of paint, and it has to be at least this size, you know, so many 100 square feet. And a lot of those are really outdated restrictions because, you know, people aren't building shacks with no power and water. They're not building something that's done without a permit that can't be hooked up to a sewer system. But a lot of those restrictions were designed to maintain the character of a neighborhood. And those are still in force and effect today. I remember one point having to get a restriction removed on a piece of property that had been in place since, I think, 1916. The property had been donated to the 4J school district, and part of the restriction was that it always had to have a monument to, it was the kids that were donating property their mom had owned. It always had to have a monument to their mother on it. And now the school district wanted to sell the property. Oh, and it also always had to be used for educational purposes. They wanted to sell the property because it was no longer useful to them, and they had to come to an agreement with the descendants of this lady. They had to come to an agreement with them to get those restrictions lifted so they could use the property for something else. And part of that was to maintain the monument to their ancestor. So they can have a pretty profound impact on the property. Give you another idea. I came up here to Oregon from Southern Nevada, and I grew up learning title insurance during the real estate boom in Las Vegas. And we had properties down there where the total declaration of covenants, conditions, and restrictions, when you add it all up, was over 700 pages of rules that govern how you can use your property. So it's important to know these things before you buy a piece of property. You want to know what you can and can't do with it. So I would be the guy you'd go to find that out. You also want to know if there are easements on the property. Can your neighbor drive along the side of your house to get to his property? And that can be really important, because if you want to subdivide your property, you may not be able to because of an easement line on part of it. Or if you wanted to somehow squeeze an extra dwelling in on a larger piece of property, there may not be room because there may be an easement for someone else. So we look for all that in a title search, and we take those documents, and the biggest part of my job is to sit there and read through these documents all day long, which is why I normally wear glasses, because I'm reading old documents that are in some cases almost illegible to determine what impact they might have on property today. And I take those documents and I correlate them all, and I put together what we call a preliminary title report. The preliminary title report is designed to show you all the matters out there that affect the property, and that's going to be your easements, restrictions, any other oddball documents that might govern the use of the property, and any monetary encumbrances, including judgments, tax liens, trust deeds, mortgages, homeowners association liens, anything like that. That's all going to show on this title report. So when you go to buy a piece of property, you're going to see that title report, and you're going to say, well, I didn't realize this big easement ran through the middle of the property. It's not going to be usable for me. And you don't have to buy the property because now you know that it won't work for your purposes. Or you can look at the restrictions and decide that they're a little too restrictive for what you want to do with the property. As far as monetary encumbrances, it's important to know what they are when you buy property. So you can make sure they're all getting paid off. So when you get a title policy, you don't want to see someone else's loan on the property or their tax lien, because that lien is going to follow the property whether that person owns it or not. That means it can get foreclosed on. So that's kind of what we do. We find all this information, we take the objectionable ones, and we work to clear them off of the title, whether that's paying loans or anything like something like that, or getting someone to relinquish an easement. One of the other things we ensure is that you have a legal right to access the property. And that in some cases, there is a case right here in Marcola where I live where about 80% of the road the people used to get to their house, they didn't have an easement over it. So we had to secure easements in order to close that transaction. So that's the kind of things we do in title insurance. Now, I mentioned earlier that I found it interesting that this was a group of real estate investors that are flipping houses and stuff like that. And Grace mentioned that maybe I could come up with some suggestions on where you could find properties that would interest you. That's pretty tough nowadays. Normally, I would say look at the foreclosure market. There are a lot of good properties that good people just couldn't afford to pay for anymore. Nowadays in the foreclosure market, though, that can be pretty tough because there are, at least in Lane County, there's a few really big players that will try to outbid you every time just so they can get it for their rental portfolio. So that can be a real tough way to go, but there are still occasionally those really nice properties you can find that you can turn a healthy profit off of. And for that, you just need to start looking at the list of defaults, properties that are in default, in foreclosure, or bank-owned properties, and see what's available out there. You may wind up bidding for property on the courthouse steps. You may be able to sneak in and buy redemption rights from someone that's being foreclosed on. And that means you can decide later if you want to pay what the successful bid was to take over the property. So there's a lot of ways you can do it, but that's one of the better ways is to look at foreclosures. Now I know a lot of people look for tax foreclosed properties. That can be really tricky because not many people are going to let a property go for back taxes, because there's usually a lot more value in the property than what the taxes are. So when you see something that goes to foreclosure based on taxes, it's usually because there's something wrong with the process. The parties weren't notified. They didn't serve everybody in the foreclosure. I've had them send tax bills to the wrong address. I had a property in Las Vegas. It was a vacant 5-acre piece of land on South Las Vegas Boulevard before the big casino expansion. And property values were going through the roof out there at the time. The county sold it at auction for back taxes for $6,900. The guy that bought it sold it to another gentleman for $650,000. That gentleman wanted me to insure it for $2.6 million, which was a reasonable value for the property at the time. So I got to looking at it and I determined that the county was sending the tax bills to the address of the vacant property. And some vacant land does have addresses, but if you don't have a mailbox, they can't deliver the mail. So they sent the tax bills there instead of to the property owner in Texas. They sent the notices of the tax foreclosure there instead of to the property owner in Texas. So the upshot was, when I finally contacted the property owner in Texas, because in order to insure it, I had to get a deed from him, he started suing everybody except the title company, and everybody else started suing everybody else, and I got to sit back and watch. The county wound up paying a lot of money for that. So tax foreclosures can be really difficult to deal with because most people, Scott, that was probably in the early 90s when that happened. So it was quite a long time ago. But property values in Las Vegas at the time were doubling inside a year in cases. So, it was really booming there back then. But, with tax foreclosures, another common thing we see is the county is foreclosing on it because the taxes weren't paid because the property owner was deceased. And what they tend to do then is they notify the unknown heirs and devisees of the decedent, and that's not sufficient for title insurance purposes, because if you find out that your grandmother, after she died, that they did not provide you as her sole heir with sufficient notice, you can sue the county and get that property back. So if I insure someone who buys it at a tax sale, I need to make sure that everybody got service, that everybody knows that it was being foreclosed on that could potentially have an interest. That doesn't always happen with tax sales, which is one of the reasons they go to tax sale, is because the county's not properly serving all the parties involved. So you have to be really careful with those, and there are title companies that won't insure them at all. So those are some of the areas you could look. Other than that, it's just keep your eyes peeled. Estate sales, sometimes you can find deals at those. But the way the real estate market is right now, it doesn't seem like properties are lasting so long out there. So I'm not sure how long Grace wants me to talk. I could probably go on for 6 or 7 hours about title insurance because I know a lot about it, but it probably wouldn't be too exciting for you guys or any more informative than what I've given you. So does anyone have any questions about anything? I mean, I'm sure as investors, you're concerned about some things you might run into buying a piece of property.
Yeah, it looks like Mike Grunzin has a question.
Yeah, Mike. Mike, your microphone's muted.
Mike, unmute yourself.
Sorry about that. Hey, you described the process of the title search, and there are several title companies in the area. each title company goes through this whole process? And like you mentioned, a case where, let's say your company 10 years ago did a search on a property, so you have that old file. I mean, do you share files back and forth? Like, hey, I got something back to here and I need some of your stuff there, or I mean, it almost seems kind of
Yeah.
like reinventing the wheel.
That's a good
Right.
question, Mike.
It's a really good question. I contacted someone I worked with in the past at another title company just today to see if I could get a copy of a title report they had done on property back in 2012. Because without that, it was going to take me a long time to get this title search done. And she sent me a copy of it, and I was able to shorten the process by several hours. So some title companies do that. In this county, there's one title company in particular that does not. It's unfortunate because it's not like anyone's going to steal a deal from them. If I'm asking for some help like that, it's because my company's already got the deal. And I'm going to get a title report out whether they help me out or not. It's just going to take me longer if they don't. So if they help me, it's scratch my back, I'll scratch yours.
Yeah.
And if you need help down the road, give me a yell and I'll help you out. It just makes everything a little more efficient. That does not mean that I totally trust another company's work, or that I even totally trust my own company's work from years ago. So I often back check things. And a lot of times, when you get a lot of experience in this business, you can see things that just don't look right, even if it's been insured before or another company has issued a policy. So if something doesn't look right, I'm going to investigate it, even if I've got that prior work to base my title report off of. But yeah, that does happen quite frequently. Scott?
I got a question for you. When you're doing your title searches and you're looking at properties that have been held for a long time, how often do you come across CC&Rs that are now against the law? Because at one time it was okay to put into CC&Rs redlining and things like that. Do you still see any of that
We see
coming through?
We see that a lot. Not in newer CC&Rs, because it is against the law now, but once a document's of record, that document is there. Those words are in that document. So, when we do a title report, we list these documents, we list the restrictions, we list the easements, and we call them exceptions to the title report because we are going to give you coverage for all of this stuff except the items we show on our report. So as a title company, we have to be careful that if restrictions are violations of the United States civil rights laws in any way, shape, or form, we cannot accept that from coverage because that means we are condoning it. So we make a point whenever we show restrictions that we take exception to all restrictions except those that violate whatever the laws are. And there's a list of the actual United States code and everything else. But essentially we're saying we're providing you coverage against that because that's against federal law. So I see Grace is asking about RLID. I can't say enough about RLID. I worked for another title company here in town, but my job at the time, and throughout my career, I've been heavily involved with commercial properties. So my job at the time was working on commercial properties in 7 counties from Lane County north up through Polk, Yamhill, Marion County, that kind of thing. So I can tell you that as systems like that go, RLID is one of the best systems I've ever worked with, bar none. And I worked in a couple of states and a lot of different counties. So as an investor, you can do quite a in-depth title search on your own just using RLID.
Yeah, so don't quote me on this, but I've been using RLID for years on the Evergreen Land Title's dime.
Yeah.
You
And
guys
there
have
are,
been sharing it with me for years and I love it.
yeah, that, and I know sometimes Arlid says, hey, wait a minute, you got two people trying to use this account at the same time.
It's
So
different locations, right?
sometimes they have to close an account down and open a new one. And that's something I would suggest you might bring up with Dana. She's one of the owners.
Yeah, Dana's the one who sent me to you. Yeah.
Yeah, yeah, Dana's great. But yeah, we like to help our customers out. The thing with Arlet is you can look at that anytime you want if you can log into that. You don't have to call up and wait for Ron to call you back or send you an email back. You can look that stuff up right away.
I use Arlid every day, just about, I'm sure, multiple times a day, and I have to kick somebody out or they have to kick me out. But yeah, Evergreen's been awesome sharing it. I think somebody way back in the day in Evergreen helped build that system. So yeah, Evergreen Land Title has been like huge for Eugene for decades.
Yeah, I like it because we're an agency rather than a direct operation. So we're not as bound by a lot of the very strict underwriting requirements. We can take a lot of that on ourselves and do a lot of our own underwriting. And that has advantages. There's only a couple of agencies left in Lane County right now. So, but for me, throughout my career, working for an agency has always been better. I've always been able to accomplish more and get more deals closed. And because of that, you're going to run into title companies that will tell you, well, we can't close this. It's a rare deal that I can't close. Up until they made marijuana legal, I never really ran into a deal I couldn't close. That's something to keep in mind if you're considering buying a property that has been used for a marijuana business in the past or is currently being used for that, or you intend to use it for a marijuana business. You're probably not going to be able to get title insurance in this state because it's still a violation of federal law. And the federal government has actually prosecuted individuals that worked for title companies for being complicit in violating federal law regarding marijuana. So we're very careful about that. If we have any inkling, I ran into a deal. We had an open order on property out here in Marcola that I happened to know was being used for a marijuana grow operation, and we just couldn't insure it. So, yes, Scott.
So Mike might be able to share more than I on this, but there are quite a few grow operations on properties all over the county. What if you're saying they're probably likely not able to get title insurance? What do you suspect? What's taking place, or what's in the what's filling that gap?
Well, what's filling that gap is people are doing it without title insurance. You can certainly order a title report if you're going to buy a property like that and know what the easements and restrictions and stuff are. You're going to know what the loans are. You just won't be able to get a title policy. I can issue a title report on any piece of property. And we do issue a lot of other products besides the preliminary title report and title policies. I can do for instance, a lien and encumbrance report to tell you what the monetary encumbrances are. We get a lot of those requested for people going into bankruptcy so they can see what the liens on their property are. I can issue what we call a lot book report, which will basically be a search back a certain number of years and not go all the way back, and that'll cost you a little bit less money. There's a wide variety of reports that we can issue. The title report is obviously the most common because our goal is to issue title insurance when all is said and done. But yeah, you can get a title report, and if you're happy not having title insurance on the property, and if you're convinced that that party is in fact the legal owner and has a right to sell it to you, then the reality is it's not a real issue. But getting a loan from a bank is gonna, banks won't loan without title insurance, and banks don't want to loan on that because it's a violation of federal banking regulations. So, you have that to consider too. Cash deals, Jesse says, cash deals on grow operations are pretty common. There's a lot of cash involved in that business. I can tell you there's an operation that nobody knew was a grow operation until a guy got arrested. He didn't have the permits for it, and he was transporting it interstate apparently. And but now I can't insure that entire piece of property because I know what it was used for, and I'm reasonably sure that the proceeds from that business went towards paying for that property. So that could get me in a lot of serious trouble with the federal government if they ever decide to enforce federal marijuana laws here like they could. So, any other questions?
Yeah. Wait.
So magic mushrooms are going to fall under that same thing, correct?
Yes, as long as it's against federal law, whether the state has made it legal or not, we're not going to be able to insure it. As a matter of fact, that's a really good point. We probably need to, we put a note on all of our title reports right at the bottom that goes into that, insuring property that's been used for a marijuana business. And we're probably going to have to modify that to add psilocybin and other psychedelics to it,
So-
just to be proactive.
Just so for a follow-up on that though, so let's say January 31st of next year, the government decides to make pot legal across all 30 states, then you'll be able to put title insurance on properties that didn't have title insurance, correct?
It would be no different than insuring an auto parts store. It's just a different product. As long as it's a legal product, if it doesn't violate federal or state law, then I don't care what you're selling.
Well, Ron, do you make the distinction between cannabis with THC and hemp that has the THC bred out of it?
No, it's a violation of federal law unless it's been, now, let me back up on that. If it's hemp and it's illegal under federal law, and I believe I read something somewhere that that hemp that is not
Non-psychoactive.
non-psychoactive is legal on a federal level in some cases now. And if that's the case, then I believe we could insure it. I'd want to run that by my underwriters, but I believe we could. As long as it's not violating federal law.
Yeah.
I like what Jeanette's saying on here. So you're talking about insuring the title, and Jeanette with farmers says, I can insure cannabis operations for property and casualty. Just to make the difference clear.
Yeah, but understand the difference in our insurance.
Yeah. Yeah, they're
you know.
different. They're different
Right.
mammals. Yeah.
Yeah, and
So-
if you use proceeds from an illegal business to purchase property, the federal government can seize that property. So,
Like your Lamborghini. Yeah.
yeah, or your house.
Yeah.
And if you use it for the manufacture, production, sale, or distribution of a controlled substance, they can seize the property. It's called a forfeiture process, and
Yeah. And that's still true in play today. Just
Yeah.
like it was in the 90s and the 80s and the 70s. Yeah.
yeah, you don't see it a whole lot anymore because I think the criminals just got smarter and found ways around that. So they have legitimate businesses fronting them when they purchase property with laundered money. So it's a constant one-upsmanship game that they play with the government. So, and any laws that governments can come up with, the bad guys find a way around. So,
Okay,
Um,
I want to pivot from this conversation to something else, which is like properties that are vacant, long time vacant, maybe 8 years, something like that. And could we, or how would we find out who the note holder is to contact? Because the owners are no longer paying, and probably the note owner wants to sell, whether or not they foreclosed on it or not, but try to get ahead on that game. That's a question. Would you be able to help us out?
Absolutely. I can usually look something like that up over a phone call
Seriously?
and email the documents. Yeah. It's usually, I mean, the reality is that most financing on property has been since 1980. It's a rare thing to find a loan that's older than 1980 on property. I mean, that's
Oh,
40
for sure.
years. Even, I mean, I did find a 50-year VA loan the other day, a VA mortgage that was still active on a piece of property. But I think that's the only one I've ever seen that old since I've been here in Oregon. Most of them are out, you know, they've reached their maturity date and are gone. So most of the financing that's on property today has been done within the parameters of my computerized plan, which means I can pop a few numbers in that, pull up a list of what's on that property and pull up the active loans that are on it at that time. And I can also tell you just as quickly if it's in foreclosure.
Or pre-foreclosure.
So,
Yeah.
well, pre-foreclosure, not necessarily, because they go through a lot of motions. With a borrower, they have to, by state law, they have to, you know, contact the borrower and basically give them an opportunity to bring things current. And we don't necessarily know about that. I don't know if payments are being made on any given piece of property. I can't tell you how much is owed on a piece of property. That comes about through the escrow process, getting payoff information from the various lenders. I can tell you how much they originally borrowed, but I can't tell you how much is owed now or whether they're current on payments or in a so-called pre-foreclosure. Once the foreclosure starts, it's part of the public record, and I can tell you that.
So hang on, Ron. So pre-foreclosure is when the foreclosure starts. Foreclosure is date and the deadline, and it's one day and done. So when you say, I mean, that's the way I look at it. Foreclosure is one day and done.
In the title business, we look at it as a property is either in foreclosure or it's not. If it is in foreclosure, then the lender is going through the process of foreclosing on the property.
Which we call
Okay, that means they
pre-foreclosure.
started- Okay. Well,
Okay.
in that case, then yeah, I can tell you if it's in pre-foreclosure.
Okay.
Once it's gone to sale, it's no longer in foreclosure from our perspective.
Right. It's done. It's REO now or something else.
Or
Yeah.
privately owned.
Yeah.
You know, there are still guys that make a pretty good living buying foreclosed properties, clean them up and rent them out.
Yeah.
You know,
Every day.
especially at today's rental rates, you know.
I'm
it's
just trying to figure out
nuts.
how we can use you and help us in that business line.
Well, I'm talking to my bosses about getting a little work done to our website and upgrading that a little bit. And one thing I would like to offer customers is a foreclosure list where you can go on there and, you know, run a certain time period to see what properties have entered the foreclosure process, or as you would say, entered pre-foreclosure in that time frame. That way you can identify a list of properties and you can start looking at those properties to see if any of them hold any interest for you. I think, and that's something I want to see offered as a free service on our website.
And I think Evergreen will also, through their salesmen, or help you get lists through our lid on that kind of stuff too. But I like your idea,
Yeah.
Ron. Yeah.
Yeah, it's something I've talked them into at other companies. It was a big hit and it brought a lot of business in because someone's using your website to find the properties they're gonna by at foreclosure, they're probably going to bring the transaction back to you for title insurance
Yeah.
eventually.
What do you
So,
guys think? You think that's
kind
a good idea, everyone? Raise your hand if you think it's a good idea. Yeah, we're liking it. This is being
the thing to
recorded.
remember, when you look at properties that are in foreclosure, it's not so bad now, but not so many years ago, you might see 20 or 30 a day enter that process. And if you want to find out information about that property from a title perspective, you know, what liens are on it and that type of thing, title companies are going to charge you for doing reports on that. Now, if you're getting a title report with easements and restrictions on it also, you're looking at $300 for each piece of property. If you're just getting a lien and encumbrance report, just monetary encumbrances, you're looking at $150 for each piece of property. That's why I push Arlen so hard, because you might look at 10 or 20 properties before you find one that really fits your needs and is worth you going after. And if you spend $150 a piece on 10 properties, you're already in it for $1,500 and you've maybe identified one property. So using Arlen, you can use it to your advantage by looking a lot of that stuff up yourself for the cost of an Arlen subscription.
So I have a question about that.
Go ahead.
I was gonna say, with the moratorium on foreclosures and stuff like that, are things still being put into foreclosures where you were looking that up as with your time? Because I used to get a report on that every day, and they stopped giving me the report because of the moratorium.
Yeah, to the best of my knowledge, they can't start the process. It's almost like the automatic stay in bankruptcy is in effect everywhere now, and that means that, like, when you go into bankruptcy, your debtors or your creditors cannot do anything to collect a debt. That means they can't start a foreclosure process until they get that automatic stay provision lifted. So with a national moratorium or a statewide moratorium or anything of that nature, it's going to stop you from putting something into the foreclosure process. So the idea being that you're not allowed to take any collection action during that time.
So we're thinking that because of that moratorium that's in stay right now, that there will be a flood of foreclosures coming, maybe in 2021, who knows when the note holders decide to foreclose. Like I'm a landlord and I've been lucky that I'm collecting rents, but the moratorium on rent collection has also been in play. So there's landlords that can't collect rent and can't pay their mortgages. So
Right.
Yeah.
Yeah, it's I think it's a reasonable assumption to think that we are going to see a huge spike in foreclosures coming up. You know, a lot of people lost their jobs and they couldn't afford to pay, so that's why the moratorium was needed. And now when the moratorium goes away, they're going to have to come up with 6 or 8 months of back payments. And for someone who's been out of work for a while, that's impossible. So yeah, that's really good thinking, because I really believe that's going to happen in the next year or so.
How much is a subscription to Arlen?
I'm not sure, and it's going to depend on the level that you take it to. We have a pretty all-inclusive subscription as a title company, and there's a lot of things I can go into there that I can find flood maps and topographical maps and all kinds of weird arcane stuff that you probably wouldn't care about. So you could have a much more limited subscription, but I would encourage you to just give them a call. It's Lane Council of Governments is who runs it, and just tell them you need to know what the cost. You can go online and look up RLID, and you can click on a button on their homepage, and it will tell you all you need to know about subscription prices. Any other questions?
Wow, looks like we're dry. So just so everybody knows, I've been writing on Evergreen's coattails, Evergreen Land Title's coattails, and getting my RLID for free. Back when I started in 2010, 2011, I was paying $90 a month for RLID subscription, and realized, and other subscriptions, because I was, just getting into real estate investing. $90 a month, and I think it was for 1 to 5 users, and of course it was just me. So I'm looking at during this conversation, because as a RIA, we could probably, I'll look into getting a subscription for the members, and so you'd be able to use it. Fortunately, I don't know of something that's equal for Lynn and Benton County, that kind of stuff, because RLID is just Lane County. And Ron, you probably don't deal with those other counties, do you?
I have in the past. Lynn County, I think you can get a lot of information just going to the county website, unless they have upgraded. It's not as good as RLID, but a lot of that information, I didn't need a password or anything. I just go on their county website.
Oh, yeah.
Benton County, now we're talking 5 years ago, 4 years ago. Benton County had the most horrible system. It was all like DOS based. It wasn't even real Windows. And it was a real bear to get any information out of that system. So Benton County might be tough. You might talk to title companies in Benton County about what kind of information they might have available for you on that kind of thing. I know Marion County had a pretty good system, and I don't believe that was subscription at the time either. So I think that was directly off their county website. But RLID provides easily 20 times the information any of those other systems do. So,
Scott Minder, have you ever done any data mining on title searches kind of thing in
Yeah, I did. Right at the beginning of the year before COVID was going on, I was looking into a lot of different, it's called Liz Pens when it's right before it goes into foreclosure. And I was doing a lot of that and actually going and doing door knocking. And I was using Fidelity, and Berkshire has a really good, in our office has a really good relationship with Fidelity because they're actually in the building. My desk is literally right over the top of their office, 1 floor down. So I was able to get a lot of really good information from them. But my data mining was pretty much looking for people who were that were in trouble, and trying to find properties and help them go along. And it's funny, because of COVID hitting, that's why I asked the questions about the moratorium and stuff like that.
Yeah.
I had 3 or 4 people that were right on the cusp of signing with me to sell their houses, and then they weren't going to be going into foreclosure because of all the moratoriums. And it's just like, that's one of the reasons why Angel left, is that because her and I were working that together, and we had 5 people that we were constantly talking to, and we felt we were going to get all of them to sell, because we have when that comes up, I mean, I have a whole plan set in place, and to show people that if you're about to go into foreclosure, why we can sell your house, and especially with how fast houses are selling now, that you could walk away with a little bit of money rather than being kicked out of your house by the sheriff. So,
yeah.
Now, Scott, you mentioned you look for list pendants. which is a document that essentially says, hey, we have opened a case, a civil case to
Yes.
foreclose on this property. And those have to be recorded to provide notice that a piece of property is in foreclosure. Okay. But lis pendens, and that's from what we call a judicial foreclosure, where you go
Yes.
through the courts to foreclose. But most loans in the state of Oregon and in most states out west are deeds of trust, not mortgages. A mortgage always has to be judicially foreclosed. A deed of trust is an instrument that was created by state statutes, and most Western states have similar laws. And they were created to avoid going to court to foreclose on property. That was one of the primary reasons. Because you can, with a trust deed, you can do what's called a non-judicial foreclosure. So the document you want to look for there is a notice of default.
Yes, and I was looking for nods also.
Yeah, and you're going to see a lot more notices of default, even if we have another foreclosure boom, because the reason there was a time when a judicial foreclosure happened 1 out of 100 cases, and then there came a time during this last foreclosure crisis where judicial foreclosures were the norm. Almost every one was a judicial foreclosure. And the reason behind that was a case that was brought in Coos Bay, Oregon. What lenders started to do to avoid having to record an assignment of the beneficial interest every time they sold a loan, they put mortgage electronic registration systems as nominee for the lender as the beneficiary on the loan. Okay, so mortgage electronic registration systems, or MERS as we call it, would, as a loan was sold, they tracked it internally in their system. Assignments weren't recorded, and if you went to pay off that loan, there was an identifying number on the trust deed that you could ask who the current beneficiary was, you could find out who that was, and you could go ahead and get the payoff information from them. So it was a matter of convenience for lenders to use the system. What the guy in Coos Bay argued is that MERS is not who loaned them the money, therefore they did not have a right to foreclose. So the lenders had to start taking people to court to foreclose. That guy stalled his foreclosure for over 3 years before the case was finally decided in the lender's favor. But that brought the rise of judicial foreclosures. But attorneys have gotten to the point now where they know how to get around that with a non-judicial foreclosure. They do an assignment from the initial lender and MERS to whoever the foreclosing lender is going to be, and they can process a non-judicial foreclosure. It's a lot quicker than a judicial foreclosure. There are absolutely no redemption rights on a non-judicial foreclosure. Once the hammer falls at sale, the property's sold, and the foreclosed owner can't come back in and try to redeem the property.
Yeah,
So,
and I was looking at both nods and Liz Pens, and I was seeing about a 50-50 mix of the two. So,
and that mix is going to start shifting more and more towards non-judicial foreclosures back the way it used to be, and away from the judicial ones. With the judicial foreclosure, they can take years in the court, or they can take a few months, but at the end of every one, there's a 6-month redemption period where that owner, maybe they come into an inheritance, they can go pay the amount that was bid at sale, and you might be the successful bidder. And if you go out and put money into a property to flip it, and someone comes in and redeems it, you're out that money. They don't have to pay you for that work and those materials you put into it. So you're effectively stuck until the redemption period is over and you get the sheriff's deed to record. So
and one of the things that we were looking at is that when we were looking at those properties, we were looking for properties that were not in too terrible of shape. So we were looking for people who actually were having issues, but still had some pride of ownership in their house. That way, instead of having it go to foreclosure and go through all those steps, all of a sudden, so the house is worth $300,000. you know, they owe 270 on it and they're behind the 1 year, and all of a sudden we get them $300,000 for the property. After everything is said and done, they walk away with $10,000. And you know, that's a much better position for somebody to be in than to, like I said, to have the sheriff come and say, get the hell out. That's really what I'm looking for. I'm looking for, and when that moratorium comes back, I would say for people who are actually in foreclosure, there's going to be a lot of wolves and circling them. But you know, I'm hoping that it's not going to be just one day we're in it and one day we're not, because then it will give me the opportunity to go back to a lot of those people and go, did you catch up? No, let's get it out on the market. Because as a real estate broker, you know, especially if there's going to be a big boom and you're looking at doing short sales and things like that, banks might be more open to the idea of you selling the house and paying off the loan and holding off that foreclosure,
Yeah.
especially if those houses are selling.
Yeah. Well, I can tell you, you know, when I lived in Southern Nevada, I was actually a trustee sale officer for a time for a title company. Down in Southern Nevada, title companies can do foreclosures. So you didn't have to go to an attorney for every foreclosure. So for one of the companies I worked for, that was part of my job. And that went to as far as posting properties with a notice of foreclosure, doing all the advertising, and actually conducting the sales. So I actually held the auctions. And I learned a lot through all that. And over the years dealing with people that invested in foreclosed properties, I found that, and also dealing with a lot of hard money lenders that were put in a position where they might have to foreclose. And the conclusion I came to is the guys that were honest and fair and worked with the people, they were the ones that made the money. It was when people got too greedy for it, that's when they started, you know, going under. So, you know, you may not make as much money if you're a little bit fairer to people, but, you know, you're going to be more successful in the long run, I think. Some of these guys that would go out and, you know, excuse my language, but they go out and screw anyone they could find to get a buck out of them. And they didn't last long in the business. You know, they wind up somehow overextending themselves and, you know, getting caught up in it and wind up losing. But the guys that are fair and treat people right, you know, I mean, people have bad times, you help them out of it and you wind up making a profit. They wind up not losing their butts. And, you know, those are the people I've seen successful in that business, you know.
Yeah. One of the things I would like to have a conversation with you probably later on to see how you think of this from a title idea is that I agree with Grace and what we were saying earlier is that we're going to see this big boom sometime next year of people that are in foreclosures. And I think it's especially for small investors, like which most of us are in this group, a really great idea is to walk in with, you know, one of us that are brokers and say, listen, we know you're in financial problems. How would you like to sell your house to me and I rent it back to you? And now all of a sudden you could buy a house at less than market price and then start getting rent right away and never having to have the person move out. And then also part of that deal, work it into after so many years that they have the opportunity to buy the house back at market value. And then you would, you know, make your money on that side. And I think you'd be surprised at how many people would take that, because there's not the embarrassment of moving out in the middle of the night or anything like that.
I think
And no
that's
one
like
needs
a
to know.
90% to 100% people would take that.
Yeah.
How many of the big lenders would have lost a whole lot less money and maybe not gone out of business if they had worked with customers like that, with borrowers, you know? But Grace, I see your, who are the big players that are buying foreclosures in Lane County? Two that come to mind immediately are Adam Whitkin and his LH fund, Gorilla Capital. Gorilla
Yeah,
Capital.
those are the two I was thinking of.
Yeah.
Yeah.
Gorilla Capital, when they came to town, they immediately started going really aggressively after foreclosed properties, picking them up at sale. They were bidding sometimes over market price for them, and
They-
certainly over what the minimum bid was to shut other people out. And they built up a portfolio of rental properties that was just incredible. You know?
And so the rest of you know that they also loan to you as the investor to go into the courthouse and bid. Gorilla Capital, that's the capital part of their name, but they've been doing this for probably 15 or more years. Yeah.
Yeah, and they're absolutely, it makes it hard for the little guy to get in on the market sometimes.
I don't know how Adam Whitkin does it though.
Adam Whitkin works a lot of different angles. One of the things he does is look for redemption rights. You know, and there's pitfalls in that too. If you buy redemption rights from someone, you may find out that they've already sold them to someone else that just hadn't recorded their deed for the redemption rights yet. So then it becomes a who really has the redemption rights type of scene, and it can get pretty ugly. But I've known him to frequently buy redemption rights, and that way he doesn't have to go to the auction. So if it goes for minimum bid back to the bank, he's got the redemption rights, and he can go pay him the minimum bid, and if he decides he still wants to. So that's one angle that a lot of people use to not get caught up in a bidding war with others, and it gives them a little more time to decide if they really want it. Because if you're going to bid on property and someone else has the redemption rights, they can come and pay you what you bid, take the property from you. So
Interesting.
it's kind of like almost like a gambling game, you know.
It
Put a little
is.
money up for redemption rights.
It's not like he's saying, do you want to buy the redemption rights because the bank bought it back? So in that case, if another buyer bought the property, he'd sell the redemption rights to them. He could say, hey, I have the redemption rights. But if the bank that has it, it's different.
Yeah, but you know, if he decides he wants that property for the minimum bid and the bank got it back, or if the bank does a deficiency bid, you know, kind of hard to say all the different angles there. One thing I would caution you against is, you know, I understand that investing in property like this, there's a lot of different sources of information on different ways to get started doing this, or to maybe do it a better way. And I've seen a lot of these go by that, and some still crop up. And one that I saw crop up recently was an animal called a land trust. And it's kind of a weird deal where people would go in and talk to the people that were being foreclosed on and offer them a deal, and basically get the people to deed the property into a land trust where this person was the trustee of the trust. And it basically gave the borrower that was losing the property supposedly some control over it. And the guy that was supposedly loaning the money would then cure the foreclosure, rent the property back from the trust to these people, and these people would be the beneficiary of the trust. But there were a lot of clauses in there that meant that the guy that helped him out could pull the rug out from under him at any time for no reason. And a land trust, it turns out, was not a legal trust in itself. In other words, it wasn't an entity capable of holding title to real property. So what it became in effect was an equitable mortgage on the property that was also now subject to the trustee that may still be in foreclosure, because a lot of those guys just wouldn't bring them current. You know, they could make a $4,000 or $5,000 profit before it went to foreclosure and then skip town, and they'd come up, every property had its own land trust name. And you know, I learned about those down in Las Vegas, and when I first got up here to Oregon, people were using them a lot, and title companies were merrily going along insuring them. And I refused to do it. When my boss asked why, and I told him, he made sure that our company stopped because we had a lot of policies out there to these land trusts. But so you got to be careful if you're online looking at these different ways of doing it, and talk to a title officer about whether you're going to be able to get that property insured if you do it that way, because some of these ways are not.
Hey, Ron, I got a quick question. I'm sorry. I'm just sorry to jab in here sideways. Redemption rights. Is that a state by state case on the kind of the splitting hairs? And
Yeah.
can you give us just a quick example, from one state to another?
Most of them out west are pretty much the same. So if a foreclosure is done through the courts, a judicial foreclosure, what happens is the judge will grant the lender a judgment of foreclosure. Okay. Once that judgment has been granted, the trustee, the security instrument for the loan, is wiped out. And now the lender's security is that judgment which attaches to the property. The lender can then, now that they have a judgment, they can execute on that judgment and direct the sheriff to sell the property to pay the judgment off. Okay, so the foreclosure is obtaining the judgment. But remember, during this period of time, the borrower is still entitled. Even though the lender has a judgment, the borrower can still pay that judgment off and retain the property. But when the lender tells the sheriff to go to sale on it and sell the property, the sheriff advertises the sale, goes through all the motions, goes down and holds the auction and drops a hammer on the sale. He doesn't give a deed right away. He gives a certificate of sale to the successful bidder, whether that's the lender because no one bid on the property, or whether it's an individual like you that's standing on the courthouse steps, waving your little flag up to bid on it. You get a certificate of sale. That means you have an interest in the property, but it doesn't mean you own it. The borrower that hasn't paid his bill in 3 years is still the owner of the property. And he has 180 days to redeem the property from the successful bidder at the sale, whether that's the lender or you. And to redeem it, he pays you the amount you paid plus a statutory interest rate, which I believe right now is 9%. So he would have to pay you that money plus 9%. Now, that means he would get the property back, but he'd have to come up with a huge amount of money to pay you off. And that's not likely to happen. So a lot of times what you can do if you want to get started working flipping the property right away, you want to start cleaning it up, do a little bit of fixing up work on it and stuff like that and get it ready for sale. You can go to this guy and say, look, here are your choices. I know you can't come up with the money to redeem the property. So what I'll do is I'll give you $1,000. You transfer your redemption rights to me, and you'll have a little bit of money to put down on a deposit on a rental somewhere, or move out or whatever it is. You'll have a little bit to walk away from. If you wait until the redemption rights are up, then I'm going to have to evict you, and you're going to walk away with nothing. So a lot of people, when they finally admit to themselves that they're not going to keep the property, will take whatever they can get out of it. And if you have those redemption rights, if you own all the redemption rights, remember, junior lien holders have a redemption period also. So they can come in within 60 days and redeem the property. So, but once all the redemption periods have passed, you go to the sheriff and he will issue you a deed to the property and you can record it. Now you own the property outright. But until that sheriff's deed records, you are not the owner of the property yet. And anything you do to it could be money lost if someone comes in and redeems.
Yeah, there's sounds like there's a pretty big risk involved, anywhere from maybe 30 days, but all the way up to 6 months.
Yeah. And, I did mention that on a non-judicial foreclosure, there is no redemption period whatsoever. And that is actually wrong. The federal government, if they have a lien on the property, and by lien, I don't mean a federally backed loan. What I mean is like an IRS lien or a federal judgment that they got. So let's say you were dealing meth out of the house and and the feds caught you doing it, you know. They can get a judgment against you. And as a lien holder, you may be junior, they may be junior to the foreclosed trustee, but they, under any circumstances, have a 120-day right to redeem the property. I think I've seen the IRS redeem property 3 times in almost 40 years of doing this. So it doesn't happen very often.
Right.
But it can happen. So just things to be aware of.
You guys, I want to say thank you so much. We're past time here, and I would like to invite Ron Denton back and do a class for us on buying foreclosures. I think that he is a gold mine. I am so super excited to meet you, Ron, via Zoom and have you here. I'm just super delighted with the knowledge and information that you're teaching, and I would like to highlight you in the future to talk to us about buying foreclosures. And I wrote this big thing about land trust, trying to understand what you were talking about on that, and I want to follow up with you on that. But yes, thank you very much. So can I ask that question?
You
Yeah.
certainly can. Yeah. I'd be happy to. Trying to think of what would be a good time frame. You probably don't want me back immediately.
Well, you know, like February or something. I don't know.
That's plenty enough time.
Yeah, yeah. So you mentioned something about the land trust, purchasing a property from the person. And it sounds like you're giving a scenario like the person's in foreclosure, and this is something that you've seen here. And the buyer was putting it in a land trust and letting the home dweller still live there. And this was holding up in title or in a court because the land trust wasn't actually an entity. Is that what I understood?
It's not a legal trust. A trust has to meet certain requirements under law to be a
Okay.
legal trust and an entity that's capable of holding title to real property. No trust is capable of holding title to real property. It has to be vested in the trustee of the trust, okay?
All
But a
right.
land trust isn't set up to even allow that to happen. So rather than become an entity that can actually hold title to the property, it's what they call an equitable mortgage, where this guy now is just like a lien holder on the property. So the people that thought they were, running a scam to take the property from people using a land trust weren't actually getting the property at all, because it was against the law, because it's not an entity that can do anything like that.
Okay. All right. That clears it up, that I was understanding that correctly, and I appreciate that very much. Ron Denton, thank you so much. Welcome to Eugene. I don't know how long you've been here. It sounds like a few years. 20 years?
20. Actually, 22 years now.
In Eugene? Not in Nevada? Oh, wow.
Yeah.
Well, welcome. And thank you so much. I appreciate you so much. You were awesome. And I know people are putting their kids to bed and that kind of stuff. And thank you, Ron. I recorded it, and I'll send you a copy of the recording so you can see it too, in case you want to go to Dana. Thank you, everyone. Good night.
Thank
Jen.
you.
Good night, everyone.
Good night, Mike. Good night, Scott. Good night, Ron. Thank you.
Good night.
Bye-bye.